What's going on, everybody? Welcome back to another Everyday Growth Advisors daily brief where we plan to trade and trade the plan. It's once again another market breakdown here for you guys so that you don't have to do it yourself. So welcome back. Thank you very much for supporting this channel. And right before we continue here, if you could just drop a like and subscribe if you haven't yet, because we do these videos every day for you guys. We would truly appreciate it. If you find this content helpful, make sure that you drop a comment on anything that you want us to cover in all future videos. Today in the markets, we had a pretty muted breakdown, mainly just a pullback, which we were expecting already. We already briefed our Discord members on this potential downward movement on our playbook and as market movement for this week, heading into the FOMC meeting, which is going to be today. It's going to be a very, very short video today. I'm only going to break down SPY and QQQ for you guys, as well as the VIX. So mainly today we saw a lot of price action coming down, correcting from the highs of which we have had an insane run from the past few days. Nominal pullback, haven't breached any key support levels just yet. I'll get into the technicals in a second here. And we are just seeing a normal consolidation, the Qs coming down a little bit, the NASDAQ, and also with SPY, as well as the VIX kind of normalizing or heading a little higher into the $16-17 range. So let's break this down without a frown and peel this onion today. I hope that you guys are ready. So looking at the SPY ETF here for the day, remember that the key pivot level to hold is still this key level at the 422. We haven't even broken down below that level yet, so 420 will be a key level to hold. Today is going to be a very volatile trading day, and for that reason I won't be trading more than likely. I will be taking this day off. We got rejected right at the 61.8 Fibonacci extension yesterday, which was a perfect rejection there, which we might see us come down into the 420s before moving another wave to the upside. However, I do think that we might see the market behave favorably within the next few days. I think that the FOMC meeting is just a confirmation for traders to understand that inflation is at bay and the Fed knows what they're doing. Once the market gets that consensus and starts to feel more lighter about the situation and talks about pent-up demand and the economy recovering starts to become wider, then we will see majority of these price actions moving higher. I think the next interim target for the S&P 500 is going to be in the 430 range, and I will keep you guys posted as I confirm that this wave is now over. I want to wait for this to break trend before I confirm that this wave is over, because for now this is still a pullback on the uptrend, and we can't form another Fibonacci wave to the upside without confirming that this wave is actually over. So we'll be waiting for that to happen, and once SPY breaks trend and comes back down to the 420 level, that will allow me to plot the downside extensions and then followed by the extended upside extensions from there. So I'll keep you guys posted on that. For today, we really want to hold 420, and if we don't, then 418 and 416 have to be last lines of defense. These will be the two levels at which we will see majority of price action occur if something crazy happens. Other than that, I think holding the 422 and 420 is a key pivot today. If we don't hold these 2 points, we will see 418 and 416 within the next few trading sessions. So that's what I'll be watching personally as we go forward here. Moving on to QQQ here. We had a very nice wave up. We need this small wave down. Remember, we are very bullish on tech right now, mainly because of the way interest rates are being priced in. And the bond market's also reflecting the same sentiment. We see the bond correction to the upside as a pure technical play right now. It does not look fundamentally or macro challenged. We think that investors are buying up bonds because they are fairly cheap and present a good risk-to-reward ratio for the upside. That's one of the reasons why bonds are seeing an influx. For QQQ and the relations to that, we can see we came down back to the 23.6 for support here. And if we break the 23.6 for support today, the next level will be the 340. And 340, if we lose 340 as a support, then we will be seeing a downside slip all the way to 334 or 335. This is the key levels for QQQ that will act as a support now. So 340s, and if we break 340s, then we'll see 337 broken, then 335. So you have about decrements of a couple of dollars here and there. If we do bounce on a 23.6 here, then expect to go for the full extension of the 61.8 and beyond at 350s and plus. So still pretty bullish over here. The trend is still very bullish. We have no reason to think otherwise yet. So we will be going day at a time and confirming this for you. Another update here on the VIX ETF, or the VIX index, sorry, not the VIX ETF, the VIX index. Remember, these represent the open interest on out the money strikes, and we can see quite a fair bit of them are being bought up. Now, I actually kind of messed up here because I wanted to get in on the $15, and I mentioned it a couple of days ago. I was looking to enter some debit spreads, but I did not, and so now I'm gonna have to wait for the next wave up. Yeah, sometimes you miss these trade entries. I thought the VIX might come down a little bit more. I was expecting the QQQs and SPY to rally a bit more before the correction, but I guess the timing wasn't that great. I do like the possibility of this making a lower low here, and so I think the VIX might continue its downward descent once we get the FOMC news and whatnot. Fear should once again drain out of the market. This short-term rally here is just a corrective wave on this downtrend right now. So I think you know, there's a pretty strong downtrend being formed right here, and we'll see if the VIX can continue right here. Rejection here at the 1750 level would make sense. It could go as high as 1770 though, before seeing a pullback. So definitely don't get faked out, and it's pointless to chase calls here. Wait for the pullback, and then we'll probably enter calls when we get back to the $15 level once again. That was a key level we were watching before, and that's a key level we will watch again. So that's all I have for you guys, mainly, and maybe I'll just throw in energy here once again. Was one of the plays that we're looking at, and we still remain bullish on energy through summer. So make sure that, you know, if you haven't already positioned yourself for this trade, obviously the right time was when I mentioned it a couple times, the last week and stuff, but the bounce play, which I mentioned on Monday, was already paying. So this was a great one to take to the upside. And I think that energy is going to continue to consolidate and head higher because you know, of pent-up demand, and then crude prices getting higher. OPEC is definitely going to take advantage of that situation. So that's just a couple things. Let's do the conclusion and the breakdown for today. So once again, do not overextend bullish positions. Wait for the FOMC news. I would say today is a perfect day to take off, to be honest. I personally will be taking off. Mainly because I have finals for my master's program this weekend, and then also at the same time I don't see attractive risk to reward ratios on much of anything. So this is kind of a halt day. Today was a halt day. We didn't see much movement. Market was muted, but then today we will see a volatile day. We'll see either market go in either direction, but we won't see the actual direction today. That's how usually FOMC meetings are. You don't see the actual direction the market picks on the day itself. It usually lags by a couple of days. So give it about 1 or 2 days before you see the actual move in the market, and then make your decision. So today is really a perfect day to take off from trading. If you know, go outside, do something outside. Don't bother with trying to chase these trends today, because it's pointless and you will get yourself into a sticky situation. Apart from that, I would say just remember to stay hydrated, be mentally focused, and chase after what you you know, are aiming for, your goals, your ambitions. Keep it alive. I love hearing from you guys. Make sure you once again smash the like button. Appreciate you, and have a great day. Take care, and I'll see you guys tomorrow for the breakdown of the FOMC minutes.